the teleprompter, which is what we are supposed to read, says it was a huge day on Wall Street. That is understated. The NASDAQ up 6%, its best day since 2009. It was the single best point gain ever for the New York Stock Exchange. Not percentage, but point. Either way, Bob Pisani at the NYSE. This was indeed a bigly day.
Yeah, it was a really tough day overall. Started out and got a lot better as we went on. Amazon, take a look at some of the moves up here. Amazon up 9%, the best day in a year. Facebook up 8%, Netflix up 8.5%. Apple and Alphabet up 7%. These are all high beta names, guys. So meaning when the S&P is up, say, 1%, they'll move more. Amazon, for example, will typically be up 1.6% when the S&P is up 1%. And that's exactly what happened, essentially. With the S&P up 5%, look at Amazon up 9.5%. That's a sign of how oversold it has been. Netflix, for example, typically be up 1.9% when the S&P is up 1%. That's a really high beta name. That's just shy of what you would expect here. S&P up 5%, Netflix up 8.5%. Apple and Alphabet up 7%. Other tech names have had it tougher, but tech is still outperforming all throughout the year, down 5% compared to the 9% decline we've seen for the S&P 500. As benefits the high beta names, the volatility has been incredible. Semiconductors, for example, have gone from up 15% to down 20%. That's just as a group. That's a 35% swing for a sector. Enormous. Here's another way to look at this volatility and the way I like to look at it. Many stocks are way off their highs, but they're still up for the year. Look, for example, 50% off its highs. AMD, 50% off its highs, still up 70% for the year. Adobe, 21% off its 52-week highs, still up 25% for the year. Even Microsoft, 15% off its 52-week high, but still up 15% for the year. Cisco, 16% off its high, still up 9%. This gives you an idea, Brian, of how huge the swings have been this year. Back to you.
Absolutely massive. Bob Pisani, thank you very much, my friend. All right. Now, let's go to three technology names that you may want to buy right now. Why do we say that? Well, let's go to the charts once again with Todd Gordon of TradingAnalysis.com, who has some things that he does like despite remaining bearish on the overall market. Todd.
Yep, absolutely. There's the names I added to my portfolio today just to see how much of this short squeezing rally we can ride. Apple's a good holding. I added some today. We're in a beautiful technical position. This right here is the weekly chart. You don't just look at moving averages on the daily. You can look at weekly. And I believe sometimes those MAs are more powerful on the weekly. This is the 200-week moving average. And you can see we came right down. The average price over the last 200 weeks of Apple is right there. So we just simply mean reverted. That's all that means. On top of that, if you take a look at the move that originated from 80 all the way up to that 210 area, whatever, in Apple 220, we did a 50% price retracement, which winds up being right on top of that. So the zone is everywhere from 147 to 142. We got right down to that 147 area. Put the bounce in. We closed up around 154, 155 today. So I would say good enough. I added to my holdings in Apple. We could get a bit of a bounce, maybe back to about 160, 170. That's all I'm looking for. Next one up, Google. It's actually held really, really well. Alphabet has held really, really well. A good shuffle support right around this even 1,000 level. And if you were to throw any indicator up there, any indicator you want, you would show some divergence. You would show a loss of momentum on the approach to 1,000. The rate of change is decreasing. So I think that short squeeze could continue up, maybe get a move back towards about 1,100 in Google. And here's a sleeper, one of the largest holdings in my portfolio, a service called Twilio, which I actually used to send text messages out to all of my subscribers in my business. Really, really good relative strength. TWLO to the S&P. You can see Twilio divided into the S&P, certainly showing a very strong outperformance. The 200-day moving average adding some really good support here. I think we're right around the 82 level. I think a move back towards 100 on any kind of short squeeze. We could even make a 52-week high on Twilio. So I really like this one. Added more to my holdings today.
Yeah, hey, Todd, I know you're negative on the overall market, but you're bullish on Google. How systemically important is Google, if at all? I mean, I know it's one of the FANG stocks, so it matters. So if you're right in the technology analysis, won't it matter to the overall market because Google is so big and important?
Absolutely. And we're actually seeing some tech relative strength, NASDAQ relative to the S&P. We're starting to see tech kind of outperform. You're seeing a lot more S&P heavy sectors like industrials and other names really start to press lower. So I do think, again, we could get a short-term move up here. I'm not saying we're all going to be heading out and making a new high, but you can get a bounce in Apple, up to that 150. You could get Google up to 1100. You can get Amazon even back to 1500. So I think tech is starting to show some good performance. The other thing that I'd mention is semiconductors. SMH really started to hold some good lows. So I really do think that tech might be a source of value in here, might be some stability, I think, in an overall weak tape.
All right, Todd Gordon, tradinganalysis.com. Todd, thank you very much. So, Gene, we know that Todd likes Google. Apple, you think it will outperform in the near term?
That's right, Brian. This afternoon, we came out with our 2019 predictions. So we have 8 of those predictions. The number one prediction is that Apple is going to outperform the rest of FANG. I think there's going to be a breakup in FANG in 2019, but specifically, I agree conceptually where Todd is. Some of the numbers he talked about and where Apple can go, we're in a disagreement. I want to put some quick context. Every about 10 years or so, there's a different methodology in terms of how investors think about the Apple story. The last one was the iPhone. This next phase is around services, and we're not talking about the 15% business of their services. This is the hardware operating like a service. If that happens, and they can start to get investors more comfortable that there is some stability in this business and predictability, you could see a consumer staples type of a multiple, which would imply about a $350 stock. I mean, this is orders of magnitude more than, as a sell-side analyst for a long time, it was always a little bit nerve-wracking to really stick your neck out. That's why you see these marginal price increase targets. But this could be a much bigger story about Apple's next chapter.
Yeah, well, Apple suffered just like the market did with the Fed. They botched this transition. They did a terrible job in the last quarter, basically surprising the market, saying, hey, we're not going to issue any guidance anymore.
Let me ask you this.
They botched it,
how else do you do it? They did it on a 40% earnings growth, 20% revenue growth.
I mean, listen, we can go back and forth about how they should have done it. The way they did it, botched it, but that creates an opportunity for investors. And so I agree with you. You have fundamental support for this. They have, they botched this, so now people are saying, oh, geez, we don't know what's going on with this. They've dumped out of it. That's an opportunity in Apple. I like it here.
Do you think they made any kind of a weird marketing mistake? I mean, you hear people, you've even heard commercials called the XR. It's the 10R, which sounds like a Nissan. Like, this may be a rare marketing mistake. I got an email today. You could buy the new XR for $499 or something. Aren't you worried that it's just not going to live up? That they may have made a rare, if not one-time mistake with this rollout?
I think, let me fast forward here for a month. I think Apple's going to guide down for the March quarter.
You do?
I do.
Okay.
And I still think this is going to outperform the rest of FANG.
The guide down is maybe already into the stock right now.
It's mostly priced in, but I think what gets lost is, yes, there can be some incremental shifts, but if you look at just holistically how people are centering their lives around Apple, that becomes more of a services like a business, and that deserves a higher multiple.
All right, may guide down for the March quarter, but probably already priced in. Bullish on Apple.